Housing sales historically peak seasonally in May and June, but this year they may be cresting in April. You've heard the talk, you've heard the whispers. Is the market changing? Did it change unseasonably early? We'll see if 2022 bucks the trend of the past decade plus for home sales. Compared to last April, the number of listings that are pending sale and the number of new listings are up, which is a sign that the selling season may continue to be active in the coming months. Contract signings increased year over year as ready buyers scooped up homes. The count of pending listings was 3% higher than April of 2021. Standing inventory, or the number of active listings that were on the market at the end of April, jumped 41% compared to last April. The count of listings that were actively available for sale at the end of April this year was just over 2,900. Now, this is the first time we've seen active listings above the 2,000 mark since last November. That's great news for buyers. To the delight of home shoppers, April brought a fourth consecutive month of increases in the number of new listings to hit the market. Also a seasonal trend. Now, compared to last April, 4% more new home listings came on the market, and sellers brought the most new listings to the market in the $400,000 to $500,000 price range, which represented about 25% of all new home listings. The number of closed listings in April fell short of last April's count by only 6%. There was a 9% month-over-month increase in sales as spring activity continued. 4 days continues to be the median amount of time it's taking a home to go from active to pending in the MLS. Now, home prices from $500,000 to $600,000 saw the most closings in April, followed by the homes from $600,000 to $700,000. Together, those homes actually in those price ranges comprise 36% of all April closings. Strong activity continued in the luxury market as well, and there were 38% more homes in the $1 million and above category than we saw last April. The $1 million and above range also saw 60% more new listings come on the market compared to April of last year. Mortgage rates are up, which could make affordability a challenge. Analysts expect higher rates will lead to more moderate growth in home prices as demand eases. One factor that could help you make your decision to buy now is how today's mortgage rates compare to the historical data. While hit higher than the average 30-year fixed rate in recent years, the latest rates are still comparatively low when you look at the bigger picture of where rates have been since 1971. Now, Mark Fleming, the chief economist at First American, explains it like this. Historical context is important. An average 30-year fixed mortgage rate of 5.5% is still well below the historical average of nearly 8%. The buyers who are springing into action now are motivated to make their move because they know rates have steadily increased this year, and they're eager to get ahead of any further increases. Why? Well, when mortgage rates climb, they impact the monthly mortgage payment that you'll have on the home that you're buying, of course. Basically, it's likely going to cost you more to buy a home if you wait. Experts say mortgage rates will rise, although more moderately, in the months ahead. Now, Odetta Kushi, who is the chief deputy economist at First American, explains, ongoing inflationary pressures remain likely to push mortgage rates even higher in the months to come. Makes sense. So if you're ready and financially able to buy now, it may make more sense to get off the fence and make your purchase sooner than later. As Nadia Evangelou, a senior economist at the National Association of Realtors, says, with even higher interest rates on the horizon, I don't see any reason to hold off from purchasing a home right now. If you feel financially secure, you should start looking for a home. At the end of the day, there is no perfect advice on when to buy a home. What you should do depends on your goals, your finances, and your personal situation. Use this information with the help of local real estate professionals like ourselves, folks that I recommend to work with on the mortgage side, to make an informed decision on what's best for you. Further, the mortgage report sums it up best in this way. If you're on the fence about whether to buy now or wait for a better deal, buying sooner rather than later might be wise. Now that said, buying it is always a personal decision, of course, so whether you should buy in 2022 depends on your financial situation and the local housing market where you live. Now let's talk about the ugly word of recession. We've mentioned it before. The word recession is thrown around a lot these days, and we're all a little leery that a recession will feel like our most recent bout with recession, such as the one in 2008. Not necessarily so, however. A recession is a significant decline in economic activity spread across the economy, normally visible in production, employment, and other indicators. A recession begins when the economy reaches a peak economic activity and ends when the economy reaches its trough. Between a trough and a peak, the economy is in an expansion. The first occasion on the graph shows when home values depreciated was in the early 90s when the home prices dropped by less than 2%. It happened again during the housing crisis in 2008 when home values declined by almost 20%. Now, most people vividly remember the housing crisis in 2008 and think that if we were to fall into a recession, that would be repeated. But this housing market isn't a bubble that's about to burst. The fundamentals are very different today than they were in 2008. So we shouldn't assume that the path we're heading down is the same path. We're not currently in a recession in this country, but if one is coming, it doesn't mean home values will lose value. History proves that a recession doesn't equal a housing crisis. Let's connect today so that you can better understand your budget and be prepared to buy a home even before rates climb higher. That is not a scare tactic, it's just what we understand, and that's our recommendation. And because, as always, we understand that your situation may be unique, now more than ever, it matters who's advising you on these issues. So please call us to discuss how this current real estate market impacts you. We would love to hear from you. And of course, don't forget to subscribe to my channel if you haven't already to get the latest video updates, and toss me a question or a comment or a like if something comes to mind. Take care.
Dude, listen.
Ready?
Don't move your face.